Well, it finally happened. A single social media post from Donald Trump about China just sent the Bitcoin market into an absolute freefall. We just watched a geopolitical shockwave slam into the crypto market in real time, and the fallout is brutal. We're going to break down his exact words, show you the immediate catastrophic impact on the charts, and talk about what this chaos means for your crypto. This isn't just another dip, it's a politically fueled crash that vaporized hundreds of millions of dollars in minutes. You need to understand what's happening because this move just changed the game for everyone holding Bitcoin. So, what exactly lit the fuse? It was a lengthy and aggressive statement posted by Donald Trump on his Truth Social platform. He did not mince words. In the post, he declared that China was becoming very hostile and accused Beijing of trying to monopolize the global supply of rare earth metals. Now, this isn't coming out of nowhere. For context, China recently tightened its export controls on these critical materials, which we need for everything from smartphones and EVs to advanced defense systems. Trump's post was a direct and furious response. He accused China of trying to hold the world captive with what he called a sinister and hostile move. He even claimed other world leaders had contacted him and were, in his words, extremely angry at China's great trade hostility, which came out of nowhere. But the line that sent markets into a nosedive was the threat that followed. Trump explicitly stated that one of the policies being calculated at this moment is a massive increase of tariffs on Chinese products coming into the United States of America. This wasn't some vague warning. It was a direct threat to reignite a trade war that has caused immense global economic anxiety in the past. And to pour gasoline on the fire, he suggested a planned meeting with Chinese President Xi Jinping at the APEC summit in South Korea might be off the table. He said there now seems to be no reason to do so, signaling a major breakdown in diplomatic talks between the world's two biggest economies. The language was clearly designed to project strength, but it sent a jolt of pure fear through every financial market on the planet. He even added a personal jab, saying, "I have always felt that they've been lying in wait, and now, as usual, I have been proven right." It's this perfect storm of accusations, tariff threats, and canceled diplomacy that created the one thing markets hate more than anything else: total uncertainty. The crypto market's reaction wasn't just fast, it was instantaneous and violent. Bitcoin, which had been trading calmly between $121,000 and $122,500, absolutely plunged. Within minutes of Trump's post, the price fell off a cliff, dropping below $119,000 and even touching $118,000 at its low point. That's a drop of over $4,000 in the blink of an eye. This was a panic induced dump, not a gradual sell off. But the price is only half the story. The real carnage was happening behind the scenes with leveraged traders. In the first hour after the post, a staggering $420 million worth of long positions in the crypto market were forcibly liquidated. Some reports show that number quickly climbed toward half a billion. On a daily scale, total liquidations are approaching $600 to $700 million, wiping out over 155,000 traders. Let's quickly break down what that means because it's crucial. A long position is a bet that an asset, in this case Bitcoin, is going to go up. Traders use leverage or borrowed money to make those bets bigger. When the price suddenly crashes, the exchanges systems automatically sell their positions to stop the bleeding. That's a liquidation. Now imagine tens of thousands of those automated sell orders hitting the market all at once. It triggers a domino effect, a death spiral known as a liquidation cascade. The first wave of liquidations pushes the price down, which triggers the next wave of liquidations at a lower price, and on and on. That's exactly what we saw. It was a brutal, cascading failure of bullish bets, all set off by a single political post. Bitcoin and Ethereum traders got hit the hardest, with liquidations for those two assets alone hitting 73 million and a whopping 175 million, respectively. This is the brutal impact. Hundreds of millions of dollars in speculative bets erased in minutes, fueling the very crash that started it all. And this wasn't just a Bitcoin problem, it was a market-wide contagion. Fear spread like wildfire. Major altcoins, which are often more volatile than Bitcoin, got hit even harder. Ethereum dropped below $4,200, losing over 3 to 5% of its value. Other big names like Solana, XRP, and Dogecoin saw similar drops from 3% to 6%. It was a sea of red, sparing almost no corner of the digital asset world. The pain wasn't just in crypto either. The shockwaves slammed into the stock market, especially companies tied to the crypto industry. Shares of Coinbase, Coin, and Robinhood, Hood, fell by over 5%. Other crypto-related stocks, like the stablecoin issuer Circle, CRCL, dropped by as much as 7%. It just goes to show how intertwined the crypto world has become with traditional finance. A panic in one sector now immediately bleeds into the other. Zooming out even further, the hit to the broader financial world was just as severe. The Dow Jones Industrial Average fell by over 350 points, while the S&P 500 and the tech-heavy Nasdaq also dropped sharply by 1.3% and 2.6% respectively. In the hours following Trump's post, hundreds of billions of dollars in value were wiped from the stock market. The global crypto market itself lost nearly $125 billion in total market cap in just a few hours. So much for Bitcoin being a totally uncorrelated safe haven asset, right? Events like this are seriously testing that theory. When one of the most powerful political figures on earth threatens a trade war, investors dump all their risk assets. And that now clearly includes Bitcoin and the entire crypto ecosystem. Look, this situation is changing by the minute, and the news we've covered today is going to have ripple effects for days, if not weeks. If you want to stay ahead of these huge market-moving events and figure out what they mean for your money, make sure you subscribe and hit that notification bell. We're tracking this live, and we'll bring you updates as they drop. And let me know what you think in the comments. Is this a short-term panic, or are we seeing the start of something much bigger? I read every single one. So the billion-dollar question, what's next? Is this just a quick dip that savvy investors should be buying? Or is this the first tremor before a much bigger earthquake? Right now, analysts are split, but everyone agrees on one thing for the immediate future: extreme volatility. The market is hanging on every word, every rumor, and every hint of what's to come in the US-China relationship. This means we can expect wild price swings to continue for at least the next 48 to 72 hours. There's a best-case scenario where markets start to calm down next week, but that's a huge if. It all depends on whether we see de-escalation from both the US and China. If no new tariffs are officially announced and the aggressive talk cools off, we might see some stability return. The more pessimistic and perhaps more realistic view is that this could be the start of a major macro correction. Ongoing trade tensions between the world's two largest economies cast a dark cloud over the entire global economy. This isn't just about crypto. It impacts supply chains, corporate profits, and consumer spending. In that kind of risk-off environment, assets like Bitcoin could face downward pressure for weeks or even months. Your crypto portfolio is now, more than ever, tied to the whims of global politics. But here's an interesting twist. While retail investors were panic selling, some data suggests institutional players were doing the exact opposite. Reports indicate that as prices were tanking, US-listed Bitcoin ETFs saw record inflows. This suggests the big money might be seeing this as a long-term buying opportunity, scooping up Bitcoin at a discount. It's a classic transfer of wealth that we often see during moments of extreme fear. So what should you watch for? Keep a close eye on any follow-up statements from Washington and Beijing. Any sign of things cooling down could spark a relief rally, while any more hostile moves could trigger another leg down. This whole episode is a harsh reminder that in crypto, you're not just investing in technology anymore. You're investing in a market that's plugged directly into global politics. So what did we learn today? First, Donald Trump threatened a massive increase in tariffs against China, accusing the country of hostile trade practices. Second, that threat triggered an instant and brutal crash in the crypto market. Bitcoin plunged thousands of dollars in minutes, and a catastrophic wave of over $420 million in liquidations wiped out traders who were betting on the price to go up. Third, the fear spread everywhere, hitting altcoins, crypto stocks, and the broader stock market, erasing billions in value. We are at a critical moment. The market's violent reaction proves just how sensitive crypto has become to geopolitical shocks. The next few days will be telling. We'll see if this was just a flash of panic or the start of a longer downturn driven by macro fears. What's certain is that the game has changed. Political risk is now a factor that every single crypto investor has to take seriously. Thanks for joining us for this critical update. Stay safe, stay informed, and always remember to do your own research. This is not financial advice. We'll be here to cover the fallout.